Everyone starts out renting. Renting is not the problem. Staying a renter forever is the problem because you lose stability, you lose money, and you lose opportunity. On average, the average homeowner who bought a property 3 to 5 years ago has now gained between $40,000 and $120,000 in equity, adding to their net worth for doing absolutely nothing by just buying and owning and keeping the home. So if you've been looking to buy a house and you don't know how to actually do that by getting a mortgage, or you don't qualify for a mortgage, but you want to buy a house, this video is for you. In today's video, I'm going to be sharing the 12 smartest ways that you can buy a home now and start investing in real estate. And if you watch to the end of the video, I'm also going to be sharing a bonus of how you can actually start to buy real estate with no money whatsoever. So make sure that you watch to the end and let's get started. So even if you think your credit is too low, your income is too low, or the market is too expensive, I'm going to be sharing with you the exact step-by-step strategies that we use to help hundreds of people go from renting to owning on an annual basis. The fastest entry for you to buy a home and start to invest in real estate is rent to own. So rent to own gives you many options that are unique in that rent to own allows you to be able to have a negotiated down payment when you're buying a house. When you're buying a regular house, there's averages that you actually have to meet. So a conventional home with a conventional mortgage may require you to put 5% down or even more. With FHA, they may require you to put 3 to 3.5% down. With rent to own, the down payment is negotiable. In addition to that, with rent to own, you don't need credit. Rent to own does not require you to have good credit or any credit whatsoever at all. You can actually move into the property now without needing credit or without needing a mortgage to move into the home. The third great thing about rent to own is that you can actually build equity while you rent. So you can actually move into the property at a locked-in price and then live in the property and ride up the equity appreciation in the property. As we know, most areas and most markets, the properties are appreciating. So as you live in your rent to own at a locked-in price, the property value that continues to go up is yours to keep because that appreciation belongs to you because you locked in the price when you started your rent to own. The fourth great thing about rent to own is that it's super low competition. There are many people who do not have the ability or know where to find these properties because they're not abundantly readily available. They don't know how or where to find these homes. By the way, if you want to access our secret rent to own list that we release on a monthly basis and you want to know step by step how to actually find rent to own homes, I've done an absolutely free, 100% free webinar that you can actually access and watch by clicking the link in the description below. So make sure you check out that free webinar and learn how to access our secret rent to own homes list. Number 2, the second smartest way to buy a home and invest in real estate is by using FHA mortgages or FHA loans. So we've actually spoken about FHA mortgages and FHA loans, and they're very friendly for first-time buyers, starter homes, starter buyers, starter investors in real estate. FHA covers residential properties from 1 to 4 units and allows you the ability to put 3 to 3.5% down. So the great thing about FHA is that it's an entry point and it gives you the ability to be able to actually have a small portion and then use that as a down payment in order to be able to buy your first home or your first investment property if you're buying a 1 to 4 unit. So many people have actually utilized this to get started in real estate and buying their first home, primarily and ideally buying a multifamily in the beginning, because with real estate you make your money when you buy. So it'd be a wise idea if you're starting out to buy a multifamily property that you can actually get rent from to be able to help you pay for it utilizing your FHA loan, because the FHA loan is primarily designed for first-time buyers. So once you're a first-time buyer, there will be a seasoning period or a period where you will not be able to use an FHA loan because you are no longer a first-time buyer. So being that you're starting out as a first-time buyer and utilizing an FHA loan, it would be smart to actually go for a multifamily property first because you're going to have the ability to be able to get rental income from that property to help you pay for it and also then set you up to be able to buy your next properties. Now with FHA also works with those with lower credit scores. So the minimum credit score requirement for FHA is having a 580 credit score, where they can actually look at your file and also look at your income to be able to qualify you for an FHA mortgage. And as I said earlier, by utilizing this strategy, you can actually enter into house hacking by actually utilizing your first home that you buy with an FHA loan to house hack your way and start to buy and invest in real estate. And to show you the difference between renting and FHA, rent is 100% interest and FHA is not. You're able to use FHA to be able to build equity and also build your net worth by buying these 1 to 4 family residential properties, house hacking them, making money off of them while they appreciate in value. The third smart way to buy a home and also invest in real estate is by utilizing NACA mortgages, or the NACA program. So the NACA program is quite unique and is actually one of the most affordable programs in America, and their loans are generally backed by Bank of America. So with NACA, they allow you to be able to apply for the NACA loan and the NACA program and get you into a property with no down payment and also no closing costs. So this is often unique and different compared to FHA and other conventional mortgages because they also have below market interest rates. So there are multiple points that make NACA beneficial when you're going to buy a home or invest in real estate that appeals to many who actually apply for the program. Now this program has helped thousands who have gone through it, but keep in mind that with NACA, the sellers have to actually absorb the NACA mortgage, and also there are waiting periods and waiting lists when it comes to NACA. So you have to be aware that there is a process. There's a program that they actually have you go through. You actually have to submit documentation, and you actually have to be pre-approved by NACA and go through their process to qualify and get the NACA mortgage to be able to find a home that will actually then absorb the NACA mortgage. But it is actually a great program and a great way and a smart way for you to actually buy your first home and also invest in real estate. Number 4, the USDA Rural Housing 0% Down program. So if you're willing to live just outside major cities, the USDA Rural program may be just for you. This program is actually designed to be able to help those who actually won't mind living just outside major cities, living on the outskirts and starting to actually develop and build up those areas. This is actually an incentive loan that helps expansion from the cities to be able to actually have more building and more commerce and more areas open up for those who are willing to actually be the groundbreakers. So for those who are willing to take the steps to qualify for this loan. Now the great thing about this program is that you can actually qualify for 0 down, and it's also great for those who are actually seeking a quiet environment for their family, or resetting up their family, or looking to change the chapter and maybe set up a homestead or set up a farm, or those who are actually looking to move away from city life and have a quieter life. This is actually a good program that's available, and you can actually learn more about this to be able to buy your first home or buy your first investment property utilizing the USDA Rural program. Number 5, VA loans. So the Veteran Administration has a loan program called the VA loan program, and this is ideally primarily for military families. The great thing about the VA loans is that there's no down payment, and also there's no PMI, or private mortgage insurance. I've talked about private mortgage insurance. That private mortgage insurance can be good because it allows you to be able to actually buy a property when you're putting down less than 20%. However, over the long run, that can come back to hurt you because the PMI, in some cases, the lenders may decide to raise the PMI over time, and also is an extra payment. So if your payment was $1,200 and that's your principal, your interest, your taxes, and insurance, when you go to qualify for a mortgage, they may actually move that payment from $1,200 to $1,500 because $300 of that is PMI, or private mortgage insurance. So many times the lenders will actually take out private mortgage insurance as insurance to be able to ensure that you can pay the loan back. It's just another way of them making more money off the loan because they make money off the interest, but they also add PMI because the risk for you putting less than 20% down on a property is more looking at it like you don't have enough skin in the game. So this is their insurance coverage to be able to ensure that they're covered in case you don't pay and you default. It's an extra layer of money that they can make from the property and from you on a monthly basis. Ideally, it's good to go for programs that do not have PMI because you don't want that extra burden and that extra expense on a monthly basis. So the VA loan allows these military families to be able to get into properties and also have them in position to be able to receive the best mortgage product for military families in the country when they're looking to buy their home or invest in real estate. Number 6, the lease option and seller financing. So over 40% of the properties in the US are owned free and clear, which means that there are many sellers and many owners that have the ability to actually issue out a mortgage. They may be absentee owners, people who live in another state, they have a property in a specific state, and they don't have an emotional attachment. They just want to be able to monetize the property. And in those cases, there's no mortgage involved. So they can actually give you the property based on terms. In some cases, in many cases, we actually have many clients who are in our rent-to-own program that actually have their properties with us to be able to rent out on a rent-to-own basis. And in those cases, they also have lease options. Now, lease options can be combined with seller financing to create a winning situation for you if you're looking to buy a home. Because it offers flexibility, because it's great for those who don't qualify for a regular mortgage or conventional mortgage. It also is great for those who are actually buyers that are self-employed, and also those who are actually rebuilding their credit. These are actually the type of properties that you actually want to go after in the type of scenarios where there's seller financing and also lease options and also rent to own, because these are great for you to get your new start in the case where you're rebuilding, or get a start in the case where you are actually not in a position to get a mortgage or get an institutional mortgage. You can actually utilize lease options combined with seller financing. And there's an abundance of sellers that are actually doing this on a daily basis around the country. They have the ability to give a mortgage and a note on their property and actually create whatever terms that are favorable, because there's no one that they're answering to. There's no mortgage company that they're answering to. They own the property free and clear. And there are many investors who started just like you and I, renting, and started to utilize one of these 12 ways that I've actually shared in this video to get their first property and then rinse and repeat. And in some cases, their portfolios are up by 20, 30, 40, 50 homes. And in some of those homes, they own free and clear, and they can actually offer seller financing on them and creative terms that is easy and flexible for you to actually buy the home from them. Number 7, first-time home buyer grants. So this is actually one of the unique ways that I discovered many years ago of how to actually buy your first home, and also how to buy and invest in real estate. There are grants to be able to buy your home that you're going to live in. There's also grants and real estate grants that are available for you to invest in real estate, not just residential, but also commercial as well as development. There's a scale when it comes to grants, when it comes to real estate. So one of the great things about these is that there are many states that actually have grants available. First-time home buyer grants that gives incentives for those who are actually looking to buy a home to get anywhere from $5,000 to $25,000 towards their down payment, and also down payment assistance for buying a home. Many times these grants can actually be in the form of a grant that's given and issued to the buyer that this does not need to be repaid. In some cases, they can actually come on as a second lien. There may be a first position or first mortgage on the property, but the grant comes on as a second lien that is actually drops off at a specific time, but it does not need to be repaid. The key thing about grants is that you want to make sure that the grant does not have a clause in there that you have to repay it. There are keys about grants that are very important, whether you're talking about business or real estate. You really need to know what the terms of the grants are to make sure that it's favorable for you, and you're not signing on for something that's not a grant, but is disguising itself under the name of a grant. So knowing this for real estate, specifically when you're buying your first home, and also when you're buying investment property, is very important to know how to actually engage, find key grants, and also navigate the grant process to know what's on the other side. Getting the money may be easy, but if there's a hook and there's something that's going to bind you to it, is going to create more debt for you in the future, it's not a grant, it's a liability. You need to discern and know the difference. So the grants, they help you buy your first home and also invest in real estate. They should help you get down payment assistance. They should also help you get closing cost assistance. And one of the great things that I like about grants when it comes to real estate is that you can grant stack. So you may be able to actually combine the grant with an FHA mortgage, or combine the grant with a unique mortgage product that's out there that may not require you to actually have PMI. There are mortgage programs now that will only allow you or only require you to have 3% down, but they will also have no PMI attached to them. And in some of those cases, depending on the location, you can combine a grant with that mortgage program to actually have a win. So NACA has a lot of competition now because there are new programs that are coming available that is actually a win all around, where it's helping people with closing cost assistance. It's also helping people with down payment assistance, and these are forgivable grants in many cases. You just need to know where to find them and how to match them with the property in the areas that you're buying your real estate in. Number 8, Bank statement loans. So bank statement loans are a great way for you to actually buy your first home and also buy your first investment property if you don't have W-2 paperwork, if you're not a regular W-2 wage earner. There are many entrepreneurs who are actually looking to get into real estate ownership because they realize that, number one, they have a business that's cash flowing and bringing in money, or they have a business that they would like to get out of just continuing to run the business. They want to take some of their profits and invest into something that is stable, that grows. But many times, because they don't have the traditional W-2 wage earner documentation, they get blocked off from opportunities when it comes to real estate. That's where the whole non-QM mortgage industry comes in play, where there are mortgages that are available that actually cater to these individuals. So these are bank statement loans, these are self-employed loans, and these are actually loans that are specifically available for those who may not actually have the paperwork that the bank requires or mortgage lender requires on the conventional side in order to issue them a mortgage. However, these bank statement loans allow for you to be able to qualify to get the financing and the funding and get an approved mortgage to buy a house, your house, and also an investment property. So this is great for entrepreneurs, it's great for self-employed individuals, business owners, as well as gig workers. And the difference between the bank statement loans and the W-2 wage earners, since they don't have the W-2 wage earnings, what they go by their bank deposits. That's why it's called a bank statement loan. So this is actually great because this is actually an open market and it helps thousands of people who don't think they qualify to buy, actually help them to qualify and get into a property. The great thing about this is that you can actually match this with rent to own. If you're a business owner and you actually have bank deposits, but you can't qualify for a mortgage, you can actually not only rent to own, you can not only get a bank statement loan, but you can actually match that with a rent to own while you're actually in the process to be able to purchase a property later on. Number 9, multifamily house hacking. So this is actually one of my favorite because this is the best way for you to actually level up and not only start to grow your wealth, but start to invest in real estate by buying your first home. As I shared earlier, you need to start to look at, ideally, your first property, you need to look at a duplex property or 2 to 4 unit. Because what's going to happen is it's going to set you up so that you can actually start to generate rental income on a monthly basis while you're experiencing home ownership. This is a great way for you to actually build your net worth because you're building more doors as you go along and you are actually growing your net worth because every single month someone is actually paying you rent for that space. So you're not just staying in a property that's a liability, you're actually staying in a property that's an asset that's giving something back to you and helping you to actually cope and afford living on a monthly basis. So you can buy a duplex, you can buy a triplex, you can buy a fourplex, live in one unit, rent out the others, collect the rent, and start to build your net worth while you're keeping your expenses low. Sometimes it's not about making more, sometimes it's about actually keeping your expenses low. Having a multifamily property gives you a better chance, especially if you live in it. This is a great way for you to actually start. We're talking about buying your first home and buying your first investment property. And this is one of the ideal ways. And that's exactly how I got started into building and owning multiple millions of dollars of real estate. Number 10, builders incentives and new construction. So depending on your location, if you're working with the right builders in your area, builders offer powerful incentives. In some cases, they offer 5 to 6% towards your closing costs. So remember, they're building, they bought the land, they're actually many times working with their own financing division, and they can actually manipulate and tweak things towards your favor, specifically if they need to move their product. If they have a lot of inventory, they're losing money by having the land sit there with the spec builds that they've actually done and put on those properties, and they need to move the properties. They need to make sure that the community is filled because in some cases they have a phase 1, phase 2, phase 3, and they need to sell out those phases to show on their books that the properties move at a specific rate and time, and also clean up their balance sheet and then have the ability or the financing to move on to the next phase. So they can actually offer things such as rate buy downs. They can also offer free upgrades. And in some cases, some builders that we work with, they actually offer properties on a rent to own basis. So we work with banks as well as builders that have properties that are rent to own. This is another great way that you can actually start your home ownership by working with builders that have new construction that are rent to own. There are some communities that are built to rent. They build them specifically just for renting, and we include that in our secret rent to own list. Number 11, retirement funds. So many people don't know that you can actually get your down payment from your 401k or your retirement fund. This is actually a great way for you to actually get that lump sum and put it down towards a property, something that's going to grow in value, that can be in your family for generations. So think of it as paying yourself back. You actually put the seeds into that 401k, now you're paying yourself back. And then you can lock in properties now so you can actually benefit from the equity growth that's going to happen in the years to come. So borrowing from your 401k, your retirement fund, to actually put it down as a down payment on a property is actually not only a great move, but it's also very strategic in growing your portfolio, buying a house, and also investing in real estate. Number 12. So this is by far one of the best ways, if you have absolutely nothing, that you can actually start to buy your first home and also invest in real estate. And that is group investing and partnering. So when I started out, I had nothing. I didn't have the money, but I knew that there must be a way for me to actually start to own real estate. I was living in the hood, and I really had no family that had money, or no one around me that even gave me a glimpse of hope in order to be able to make this work. But I prayed, and as I started to get wisdom from God, I realized that partnering with people was my way out. So that's what I did. I started to partner up with people to find property deals. I started to partner up with people to be able to actually get into circles that would, as they invested, they would take me along, and I would do my part to be able to own a piece of that investment. And then through those means is how I started to level up. So what you want to do with partnerships, to use those strategically to start. When you don't have money and you don't have credit, you can actually partner up. This is actually a great mindset shift for many, because when you start with zero, the way you actually level up is by actually partnering. And if you think about it, everything around us is partnerships. So we look at God. God said that we were made in his image and after his likeness. The Trinity is a partnership. You have the Holy Spirit, you have Jesus, and you have God. We were made in his image. Our body in total is actually a collection of partnerships, because our hand is not the same as our head is not the same as our eyes, but they all work in conjunction, in partnership, in order to make our body function. So the pattern is there, the way in the system is there. We just have to be able to open our eyes to see it, and that's how we're going to prosper. That's how we're going to buy our first home and start to invest in real estate, by opening up our eyes to strategic partnerships. This is something that the wealthy use even till as they continue to grow. You're seeing partnerships consistently, mergers and acquisitions, and also continuous leveraging of partnerships to be able to do larger and larger deals. So when you're starting out, keep in mind that if you don't have credit, if you don't have money, you need to partner up. Find people you can partner with. Find a community that you can go into. Sometimes partnerships are business partners. Sometimes partnerships are people who you actually learn from, like let's say on YouTube or in another medium where they're educating you and they speak to you. There may be those who actually their voice speaks to you, but another, they don't speak to you. So that may be a partnership. That may be an ally that you're receiving education, you're receiving information from them, that they're able to resonate with you. And in that case, that's a partnership that's helping you to have understanding of what you're stepping into. There may be another partner that can help you financially, where you don't have the money, they have the money, but what you bring to the table is what they need, and that is the product. You can find deals, you can source deals, you can network. So you have to start to look at partnerships strategically, and that's the seed that everyone has. All of us have seed. No one is without anything, but you have to recognize the seed. So when you're starting out, you don't have anything and you want to go from renting to owning, look at partnerships in a different way. Look at partnerships by being connected to a community. That's a partnership, because this community is actually giving information out on what you're looking to try to do, and you resonate with them. Another partnership could be finding someone who's looking for someone to be able to do a specific task for them and willing to partner up with them, make them a junior partner, and have them come along, and you can learn in that process about what it is that you're doing with real estate investing, and then from there start the process of learning and doing your own thing later on. But everyone starts somewhere. So like I shared in the beginning of the video, all of us start renting, but staying renting forever is the problem. You need to get in position, if you're going to be stable, if you're going to be financially sound, to own real estate and control real estate. That's what it's all about, and that's why we share and we teach a lot about rent to own, so that you can start to get in position of not only ownership but also controlling property and knowing how to actually go about this exact process of controlling real estate, going from renting to owning. So this is not about luck. As you've seen, I've shared with you 12 smart ways to be able to buy your first home and also invest in real estate. This is about choosing a path of how you're going to go forward. Many people may be in a position where they haven't taken an audit of themselves. Maybe you actually have not thought about, okay, well, what will it take for me to buy a house? Or maybe you've been wondering how to do it. You just don't know how to put things together. You have to look at your personal finance. You have to look at your family finance. You also have to look at the price point. Where can you find affordable homes? And also, how do you actually qualify for a mortgage eventually to be able to buy this property? How do you go from renting, the rents continue to go up, to getting yourself in the position where you can actually own a home, start to build up equity, and also start to build up your net worth? Well, I'd like to share with you the fastest way to go from renting to owning, to buying your first home and your first investment property is, as I shared earlier in the beginning of the video, and that is learning and accessing rent-to-own homes. So if you'd like to learn more about rent-to-own, how to actually get into your property sooner rather than later. You don't have to wait for months for a mortgage approval. You don't have to wait for months to be able to go through the process of buying and inspections and not sure if you qualify for a property. You can actually start sooner rather than later, within days of finding the home and then starting your rent to own. So if you'd like to learn more about rent to own and more smart ways to be able to buy your first home strategically, going from renting to owning, make sure you check out the absolutely free, 100% free webinar that I've done by clicking the link below. You actually see more about rent to own, learn more about how you can actually access our secret rent to own lists and start the process of going from renting to owning. So if you have any questions, if you'd like to learn more about how to invest in real estate, let's say you're a wholesaler, let's say you are someone who's looking to see if you can actually go from not only renting to owning, but you want to buy multiple properties and you want to learn the different strategies to be able to actually do this and access these properties, where to find them, how to get into them creatively with seller financing, and also how to actually work with the right realtors, make sure you email me. My email address is AskRinde@gmail.com. Would like to actually share with you more and show you how you can actually start to navigate that entire process. And if you're looking for grants, transactional funding, down payment assistance, and also additional funding for real estate, you can actually also reach out to us at our email address at AskRindeNetwork@gmail.com. So if you have any questions, please feel free to leave them in the comment section below. You can also email me anytime. My email address is AskRindeNetwork@gmail.com. I look forward to seeing you guys in the next video. Until next time, thank you so much for watching.